Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. As on the weekly chart, the two recent weeks were inside sessions, and on the daily chart, as you can see, two recent sessions were also inside week. That's why, inside sessions. So that's why overall analysis and especially on the daily time frame chart hasn't changed significantly. So as you can see, market behaves in general according to the normal behavior of the bullish market. So it doesn't break any important moments in our prediction, some rules of how bullish market should behave. That's why currently we have no reasons to abandon, to deny it from our short-term bullish view on the market, and we still think that gold keeps chance on the further upward direction. So in general, with our analysis, it mostly stands the same. So on the downside direction, we said that 1070 area will be our invalidation point. That's some kind of the edge and the barrier between the bullish sentiment and the bearish sentiment. So if market will break 1070, it will mean that market will turn to the short-term bearish setup, and here we will not search chances for taking the long position. Instead, we will start to search the possibility for going short. But here, while market stands above it, the chances on the further upward direction exist, especially because market stands above the 1085. And right now we're mostly watching in shorter level. I mean, on the intraday scale, on the intraday charts, the 1090. Because right now, this is our major indicator for the short-term perspective. While market stands above the 1090, it keeps chance on the further upward direction. The nearest upside target stands around 1130 area. This, as you can see, will be 127 extension of this butterfly. So as you can see, on Friday we have drawn this butterfly a bit differently. So we have drawn it in such a manner. But this, guys, in general, doesn't impact on the result, because the target of the butterfly is based on the initial swing. So whether you will draw it in this way or you could draw it in something in that manner, so this really will not change the final target. Anyway, the target will be the same. So first one in 1130, second approximately 1140 areas, 1618 extension. Also, this will be the daily overbought. That's why probably we should be focused on this possible area to be hit, maybe on next week. On the intraday chart, guys, market also has accomplished all our conditions that we have would like to get. First of all, let's go through the market mechanics from step by step. So here, market has formed reversal head and shoulders. We have discussed it on the last week. Then it has started action up. Here was our first entry on the 618 support, 1081. So right shoulder bottom. Market shows the first swing up. Here it has completed the first target, A, B, C bottom, D pattern has been completed. And here market also has reached the weekly pivot resistance run. After that, it has turned to retracement that has taken approximately 2 sessions, 2 days to the downside. So and our major condition was to see that market should stay above the 1092 by many reasons. First reason is pure tactical, because this is a strong support area, circumference support 1092, 1095. This was the weekly pivot point, and it will be the weekly pivot point next week, because market stands in tight range. That's why the pivot stands almost on the same level. But another reason why this level is very important, because this is the neckline of the hand shoulders. And if market will break it down and return back below the confluence, it will mean that head and shoulders is done, and market hasn't quite complete its major target. As you know, the major target of the head and shoulders is the 1618 extension of the ABCD based on the head and the shoulder, or as I like to tell, is the distance between the head and the neckline. So let's neckline slightly higher, counted up from the neckline in the direction of the breakout. So you can see they're approximately the same, similar targets. Market hasn't quite reached it, and if it will drop below the confidence, it will mean that it will return right back down to the bottom of the shoulder. And usually when the market returns back to the bottom of the shoulder, it means that it will take out the head bottom. It happens almost every time when the head and shoulder fails. And it will be already the 1070 area. So that's why the breaking neckline to the downside will be the first bell, the first step and sign of weakness of the market. And this could put the starting point of the consequence of the breakouts. So if this strong level as the confidence, as the pivot point at the neckline wasn't able to hold market from the drop, what chances that this just 1085 will hold it? It's a really big question. On the way up, as you can see, market could form also the minor butterfly here. That could lead market somewhere to 1120 area. It's very close to the target of the head and shoulders pattern. This pattern we will be watching for in the beginning of the week on Monday and Tuesday. Also, guys, as you can see, the confidence support already has been tested by the ABCD retracement that we have discussed. So we said this market has hit the target. It should show some kind of the ABCD action down to the confidence. That has happened. Some of you I know have taken the long position here. And since upward action already has started, we should not get here too deep retracement because it already has happened after a reversal swing. So a reversal swing has been formed, deep retracement has happened. Right now market shows the acceleration. Market is not at a very bad. It's not at some significant resistance. So it should not show too deep retracement here. So minor ABCD here is enough. And upward action already has started. And here we said that we do not want to see the market will drop below it, because already retracement has happened. So, and if it will stand above these lows, it will keep chance on this butterfly. And it really has happened. So you can see that on Friday, despite this drop, market rebound and hasn't taken out of these lows. This is a very important sign. Also, guys, on the hourly chart, you could recognize probably that some triangle is forming, and you could watch for a triangle as well. The direction of the breakout out of this triangle will lead to the same consequences. So if market will drop below it, this will simultaneously lead that market to the breakout of the 1090 area and will lead us to the same conclusions as we have made here. If market will break it to the upside, well, this will mean that just market stands an upward continuation. In this case, we will start to monitor for the targets. So that's our current view on the gold market.